Hey guys, it's Wayne Scully, CPA tax strategist with 20 years of experience in auditing, small business advisor, and tax consulting. As a real estate tax planner, I'm focused on providing solutions to real estate investors in the New York tri-state area. My firm provides tax compliance, business consulting, and high-value tax planning strategies to save you thousands of dollars. All right, so I just wanted to do a quick video on filing status, i.e., single, married, and so forth. We all have to select one each year we do our individual tax return. It's just important that we select the right one, right? Because you could either throwing money away or you could be saving tons of money by doing the right thing. So just a couple of quick points on that. First of all, IRS wants to know where the tax status. It gives them more information about you. And some people might say, well, I don't want to give the government a lot of information about myself. Well, you kind of have no choice. If you're part of the tax system, you're gonna have to do that. You have to select the filing status, all right? So if you select the correct one, as I said before, you could be saving yourself tons of money by doing so, all right? So December 31st is a very important day of the year because it determines what you were for the entire year. So if you got married on December 31st, for example, let's say last year you got married December 31st, for the entire year considered either married filing jointly or married filing separately. So, and then that's kind of determines where you go as far as how much you're paying taxes, how much you're going to owe, or how much you'll pay in addition to what you've already paid. So, and basically the filing status is determined like a couple of things, right? Whether you're required to even file the return to begin with. Because if you are, let's say, married filing jointly, and you made combined, let's say $10,000, maybe you don't have to file a return, right? Okay, so maybe not required to. The only reason why you may want to file a return is to get a refund, right? That's really important, getting that refund. And then it, as I said before, it determines your standard deduction amount. So there's a standard deduction for if you're single, one if a separate one if you're married filing jointly, married filing separately, and so forth and so on. Head of household. So each of those carries its own dollar threshold attached, right? So if you fall below those amounts and you're in that group, then you might even have to file, as I said before, except for getting a refund. So let me just tell you a couple of things about the individual filing statuses. All right, so for single, normally applies to people who are unmarried, divorced, or legally separated, right? Or divorced or separated under maintenance decree governed by state law, right? It's basically saying if you weren't married, basically if you weren't married, for all intents and purposes, other things being equal, you're going to be single, huh? Now, if you're married, there are two options: married filing, as I said before, married filing jointly and married filing separately. Now, most people, and I advise most clients, of course, this is going to vary from client to client, right? Most people will fare better filing jointly. So unless there's a particular reason why you have to file separately, we're going to go into that a little bit later, you should file jointly for the most part. I'm not saying this is absolute in every case, but for the most part, I've seen it where every client I've done the analysis. If you file them separately, what's the impact? Usually it's negative. It's a negative impact. They owe money that way, right? I'm going to talk a little bit about that shortly, but the other thing about the married filing jointly status is that, if your spouse dies, let's say, God forbid, the spouse dies December 31st, you can still file joint return with that spouse, okay, for that year. Then for married filing separately, most people, like I said before, would fare better by filing a joint return. But in some instances, it's really important to distinguish yourself from your spouse. Sorry. So let's say I always give the example, like it's really way off the rails. But if your spouse is a drug dealer, for example, or doing doing some sort of nefarious activity, and of course, by law, you're required to report all your income, irrespective of the source of the funds. source of your income, you're supposed to report it. So if you're a drug dealer or a hired gun, whatever you are, you're supposed to report your income. So if you know as the spouse you have some inkling that this person is up to no good, you may want to separate yourself from them because they could get you in trouble, right? Tax wise. I mean, of course, legally too, there may be some repercussions here, but of course, I'm not an attorney, so I'm not going to go too much into that. But there are legitimate reasons why, even though you may lose money, i.e., pay more taxes, there are legitimate reasons why a person or individuals may choose to file a separate return. So that's fine. Head of household, unmarried people, usually, and unmarried doesn't mean you're not still not legally married. It just means that you're probably not living together, at least as far as the rules go. You haven't lived together for the last 6 months of the tax year. So if you're living apart, totally apart, or if you're actually divorced, or if you're actually single and you maintain the home for yourself and a qualifying person for half the year, then you qualify for half household status, right? So that's really important, because if you're a single mom or a single dad and you have a child that you're taking care of for most of the year, all the year, you should get that tax benefit, and that's what this is about, right? Now, qualifying widow or widower, probably most people don't know about this status, but with a dependent child is basically if your spouse died in a prior, not last year, for in the case of the current tax year, but in 2019 or 2020, and you didn't get married before the end of 2021, and have a dependent, then you qualify potentially for the qualifying widow or widower, right? So, and there are other rules apply. Again, these are all general rules I just gave you, just scratching the surface. And if you have more questions about this or something else, tax-wise, give me a call. My name is Wayne. I'm with W. Scully CPA PC, always working around the clock to save you a chock full of money, time, and stress. Make an appointment by visiting my website, www.wscullycpa.com. That's www.wscullycpa.com, or call me toll free 855-254-1892. And so we can discuss whatever your issue is. All right. Please comment, like, and share this video. Thanks, guys. Until next time. Bye.